let's start off with Dangote Flour, because that stock, as I said, continues to be at the mercy of sellers, falling back to 6 naira and 16 kobo yesterday. It does have this upcoming rights issue which could account for the pressure we're seeing, but what do you make of the company going forward post its rights issue and the money and the expansion plans that it has for the company?
Sorry, Samantha, if I just make a correction. Those are two different companies. Dangote Flour is Nigeria's second largest flour miller, and that's obviously different from Flour Mills, which is the largest, looking to raise about 28.2 billion naira over the next couple of months. But to answer your question on Dangote Flour, the company's taken quite a beating over the last the last month and a half. Because of its poor results. It was quite a shock to the market. They published around about 2.7 billion when the market was expecting around about plus 10 billion in profit. In fact, they had released a forecast guiding towards around 11 billion for their full year 2010. So that, I think, is what has sort of caused the sharp decline in the stock. More so, we've seen very little visibility, or even no visibility at all, on the company's operations. Management has failed to communicate to the market what's going on. And in fact, the company's lost both its CEO and also its financial director. There have been replacements made, but management clearly hasn't communicated to the market.
Wheat prices have also been a big concern for flour millers for the first half of the year. What is the outlook going forward? We saw, as you say, just that correction there with flour mills and Dangote Flour, but both of those companies being hit by wheat prices for the first half.
We think up to the end of this year, there's still the risk of lower earnings because of pretty strong wheat pricing. Wheat prices at this point are still pretty high. In fact, if sort of flirting around sort of their highs for 2011 again. And what the flour millers have been able to do is to pass on around about 20% price increase since the start of the year. But sadly, that's not enough to compensate for the levels at which wheat prices are. But I think what the flour millers are hoping is that there would be some sort of reversion in the price of wheat. Wheat is one commodity that has always tended to revert to it's pretty low levels, around about $150 per ton. It's currently trading close to around about $300 a ton. But like I said, there's certainly a risk to the earnings of flour millers in Nigeria because of this factor. And whilst they've been able to pass on a 20% increase in price year to date, that sadly is insufficient to do it. But I think there are certain flour millers that are dealing with it better than others because they're quite well diversified. Take flour mills, for example. They've got a cement business, a fertilizer business, a packaging business. They've also got an agro-allied business that also help to support earnings from the relatively weak flour milling business.
As you say, flour mills there has diversified, but it is looking to still grow its capacity in its milling business. And if it does bring on this additional facilities, it will become the second largest wheat manufacturer in the world. That is quite significant. At 75 naira 5 kobo, would you be looking to get into the stock at this price?
So did you say 35?
75 naira.
Yeah, I mean, at 75 is still very attractive. We have a buy recommendation on the company. We have a target price around about 131 naira per share. Now, the reason why we like flour mills is because it's got a robust business. It's Nigeria's largest flour miller with a 50% market share. Now, I think if you're looking to play, the Nigerian food sector, where I think it's clear that there's going to be strong growth. Flour mills, in our opinion, is one of the most potent play in that sector. The management has a very long experience playing here in Nigeria. They've been here for over 50 years. So we expect that a lot of that would translate into sustained earnings growth for the firm. What the company is now looking to do going forward is to create more synergies by either buying up complementing businesses or building more complementing businesses. You're probably aware that they own around about 28% of Unisem, which is an integrated cement company. So what they're basically doing is scaling down their import business and investing in the upstream side of the business, which is more profitable. That I think will provide greater support. And then you also have the backward integration currently going on, where they're building up their agro-allied businesses, the cultivation of crops crops like rice. You also have soya beans. With all of this business eventually, and also sugarcane as well, they will complement, for example, the sugar refinery which the company is looking to currently building. It should be ready by around about 2013. And also you have its feed business, Premier Feeds, which should also get support from the allied business, which is producing corn and wheat, rice offals, and also soya beans.